you could say a little bit about why digital payments matter for our countries and how the region would benefit from deepening digital payment systems.
The benefits to the consumers, that it will offer consumers greater choice, safety, and more convenience, and importantly, lowered costs. And if it doesn't achieve that for the consumers are not going to embrace digital payments. But just given the fragmented nature of finance on the continent, even in a country like South Africa, where you have got an advanced financial system, we had found that digital adoption has actually been faster in the far-flung areas, for the simple reason that consumers cannot reach bank branches or reach automatic teller machines and so forth. So you find that the use of digital forms of payments among the consumers is higher in those respects. And so digital payments would expand access, and importantly, for the vulnerable groups like women and migrant workers and so forth, digital payments become very important. Secondly, is that for other providers like small fintech firms, digital payments are an added benefit for other services. So fintech companies are able to just do more than payments and go beyond the payments. So we find that they could be useful, for example, even in doing tax returns and so forth. But also importantly, that it moves beyond payment, because all these things is digital, and the providers can see the flows. It also changes the manner in which they approach the extension of credit because they have got access to data. And thirdly, benefits for government and government services. The days where people would have to queue at government offices waiting to collect some form of a government grant are over. They actually are demeaning for citizens to be made to wait at government offices to access government grants. A move to digital payments means that government can pay the beneficiaries speedily and much more cost effectively using payments. And lastly, is that there are greater benefits for the broader economy as well. I think work both from the IMF and from the BIS show that if we sort out this and we are doing the digitization of payments and thus making payments efficient, could actually increase GDP by between 0.2 and 0.5%. I think that this thing, we know it improves cash flows. I think in the case of Brazil, we saw the impact of PIX, and what it had done was to increase competition, innovation, and actually reduce the overall unit cost. And so for me, those four broad benefits for the consumer, for the providers, for government and grant recipients, and for the broader economy is what for me seen as the biggest benefits of digital payments.
Thank you, Leslie. That's very very comprehensive and very clear. So if I could follow on from this, given all of these benefits that are expected to accrue to economies, to people, what is it that countries should prioritize? What is it that they need to do first to have an effective digital payment system?
The point of departure is policy. We actually have to have the appropriate policy framework that would enable the development of digital payments. And in many respects, you will find that these payment systems develop and legislation and policy ends up having to play catch up. And so for me, the point of departure should have a policy framework that is flexible, that is robust at the same time, to enable digital payments. Secondly, is having the basics in place, a basic infrastructure. When we talk about digital payments, these things must be powered. You are going to need electricity. You are going to need internet access, and those things must all be cost effective and safe. And so when we talk about the digital stuff, we're going to need data, and if you have got high data costs, it might be a disincentive for people to move towards digital payments. So getting the cost of data down, getting the basic infrastructure in place will necessitate the fast take of digital payments. And thirdly, when we regulate, we have just in South Africa been embracing or shifting towards activity-based frameworks of regulation. And by so doing, you enable other players to come in. What has been happening was that in the payment space, we say that you need to be a bank or you needed a bank sponsor. We are moving away from that. If you are in the payment space and you are taking deposits, we will regulate you like a deposit taker. If you are just doing payments, we will regulate you like a payment services provider. If you provide credit, we'll regulate you like a credit provider. So there are players who might just be doing clearing, and that is their business. So we regulate per activity rather than saying that you come in because you are a bank or you need the sponsorship of a bank to come in. And so that for me, the policy, the infrastructure, enabling the regulations through regulating through activity, so that you could have more players in place. And just to close off on Lee's point about literacy, and he talked about digital literacy, and then you're going to stretch it and talk about financial literacy as a key enabler. And one of the things that had particularly struck me is that when it comes to this stuff on technology and data, we emphasize the fact that we need to get the consumer to be financially and digitally illiterate. And we sometimes forget the policymakers, that policymakers themselves might need significant data and technological literacy, because they must understand what it is that they are trying to promote.
Thank you so much, Lesotho. Bo, if I could, yeah, absolutely. If you could, yeah, please, any reactions? In your earlier intervention, you noted the fact that, quite a bit of outreach to policymakers is needed to make sure that they understood all of the issues related to the introduction of fast payment systems. I see in our continent a fair degree of conservatism in terms of how people think about the whole fintech sector, payment systems in particular. Can I ask you, what are the potential risks in the introduction of digital payment systems, and how can these risks be mitigated to allow faster adoption?
I'm not sure I agree with you that there's been conservatism in our continent in terms of moving digital. I think that we have moved very fast. And the reason we had moved very fast was because the old model, or the model that prevailed in the advanced economies, was not quite about the risk, I prefer to emphasize firstly the benefits, and then I will see how we deal with the risks. Firstly, I think that, as I had stated, we will give the users of financial services access to cheap, fast products, and I think that that becomes important. But what has been happening is also that as we move digital, so does crime. Crime also goes cyber. So the risk of cyber becomes more elevated, and it becomes even more important for the authorities and for the policymakers to actually make these payment systems even safer. As central banks, we provide the guardrails. We have payments. We provide the settlement infrastructure, and it is very important that the retail part of these fast payment systems is located where it correctly should be in the private sector. And as we talk about the introduction of CBDC, we must be asking ourselves where the split starts and ends. And it becomes important when we look at the CBDC and we say, we would be providing wholesale CBDC. And I think that I can see the business case for a wholesale CBDC. I'm not sure how practical it is when we go retail. And when we go retail, for me, that is where the private sector should actually be coming in. And so you have got wholesale money, which is driven by the central bank, and the banks continuing, or the private sector continuing to play its role in providing these retail services, whether they are tokenizing deposits or any of those things to make the payments faster. As South Africa, we had also then decided that we would be spending more time talking about faster payment systems rather than spending too much energy on the CBDC, although we have also given ourselves the scope to be a very fast follower should the model work. And my last point that people raise as a risk is that of anti-money laundering and the financing of terrorism, that you have got these things fast and it could happen faster. But in my mind, this risk is actually overemphasized. And one of the BIS innovation hubs actually showed that we could actually be using technology to make KYC much simpler, much easier, and that we could actually mitigate the money laundering risks within the fast payment systems.